Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now remember, this is information that we're looking at from a while back. That's not necessarily the current outlook, but just as an example, you can see the comparison between the two charts. Now this is good stuff. Alan's just said that he can see what we're talking about here, which is always a good sign.
It is.
One thing that I want to just highlight, and this actually goes back to our last presentation where we focused on technical, the technical approach to trading, is that what you really need to do is just get used to, again, looking for specific clues to help you identify a specific directional bias, and from there you can then determine what type of strategy you want to implement. So just as a review for those of you, I'm sure there's some of you that are technical avid technicians out there, but for those of you that aren't, really what we're looking at is essentially an uptrend making higher highs, okay, and a downtrend making lower lows. And everybody looks at me sideways when I more or less start to explain this, but realistically this is the foundation of technical analysis, and when we learn how to identify these trends and when they're coming to an end or when they're starting out based on this information, then we can go in and make more effective trading decisions. What we want to do is we want to watch how our market or how the price breaks what we refer to as our last pivot point. So let me just give you a quick generic example here. By stating that an uptrend makes higher highs and higher lows, here we've got just a generic trend line, just a generic sort of price chart drawn here. Now we would identify that level highlighted here in yellow as a pivot point. And the idea is that provided the market continues to break or breaks that pivot, we are considered to be in a continuation of an uptrend. And of course, as we make a higher pivot, then as we break that pivot, you'll notice that, of course, we are now, again, moving into that higher level. The idea as we follow through is that as we continue to break these higher highs, we can be comfortable and confident that we're in a continuation of the uptrend. Now, a trend line can be drawn in, as I've done here, to identify that increase or that plotting of higher lows. And again, remember, this is just a generic chart here, but the idea is that as we're moving into higher highs, although the market is never going to do it in a straight line, although the U.S. dollar has come close, the idea is that as we make these higher highs and as we make these higher lows, we can be confident that we're in an uptrend. What we want to do is we want to be cognizant of when that pattern stops. And what I mean is that if we're trading something to the upside, we want to recognize that, okay, well, if a downtrend is in place or about to start, we're going to start to see lower highs and lower lows. And this is something that we can use to either look for a potential trade opportunity. So, for example, if we've seen a significant trending to the upside in any of our pair values, we could start to look for some of these signs to maybe line up for an opportunity to buy some put options for maybe a little bit of backfilling or retesting of a very significant run to the upside. But in saying that, we're now looking to identify a downtrend based on our lows, and so this being our last low in here, we can be comfortable that if our price action breaks that low, that we are now in a continuation or have the probability of continuing a downtrend. So we use that essentially as a line in the sand, recognizing that if we're unable to break back above this previous high, and we actually break below that pivot point, which incidentally we would identify as a support level, then again, probabilities are such that we're likely going to make our way down to these lower levels. And I always use the analogy of a bathtub on the upper floor of an apartment building. If that upper floor gives way, high probability, and you guys know just basic gravity, that the next chance for that bathtub to stop is where that next floor is, or at that next support level. So very rarely will that bathtub stop its momentum in the middle of that descent. It's going to look for some support first. So you can think about it in that context to maybe help you understand this whole concept of support and resistance. Now, again, as I mentioned before, we want to watch how the price breaks a previous pivot. So if we've been riding this trend to the upside, and all of a sudden our high that was made is no longer above that previous pivot, we now have a clue suggesting that, wait a second, maybe this nice run to the upside is over. If we've been in it for a period of time, we want to take some profits. If we're looking to take advantage of a move to the downside, we're now going back to these lows to watch how our prices break below, because if that price is a proverbial bathtub, then we want to see that bathtub break below and find support somewhere down in here on the next floor. So that all ties into the concept of support and resistance. And guys, believe me, I'm getting somewhere with this, because if you're looking to trade these FX options on our pair values here, you really need to make a determination as to what direction you think this market is going to go, because that's how you're going to base what types of options you're going to use and what strategies you're going to apply. So support and resistance is a key foundation for really identifying and determining these directional bias. And of course, support and resistance simply refers to the peaks and troughs that we just identified. Those are realistically your support and resistance levels. And they represent strength and weakness at certain price levels. Okay, so the idea is that our lows are considered support and our highs are considered resistance. And we don't really, if we're actually looking to take a conservative approach to trading any market, we really want to be cognizant of how our prices are trading in and around these support and resistance levels, because they're sort of that deciding factor where the bulls and the bears are essentially in that tug of war, and as the one side overpowers the other with a break above or below, you can look for the probability of a continuation in that direction. So let's look at our possible implications, and again, we want to keep things as simple as possible. An early warning of a trend reversal. So again, as we see prices trading against the resistance level, we can look at that as a clue that maybe the market is not prepared to take prices higher, and if that's not the case, then high probability we're going to start moving into some lower price ranges. Again, if that resistance is violated, if it breaks through that ceiling, so to speak, then we can look at the probability of a test of that upper price range into a higher level of resistance. Okay, if a support is violated, I'll go back to that bathtub analogy. As we break through that first floor, we have a high probability that we're going to see a continuation down into that next price range to test that lower support level. And we use this for a potential trade entry identification. Now, that being said, we can use this also as price targets for trade entry or for trade exits as well. And the idea is that of course when we get into the trade, we would be looking back in the history of the price chart to identify where prices have consolidated at these key support and resistance levels, and look for the same thing to likely happen as we trade through our opportunity.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.